Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the small caps. Okay, the penny stocks have been running. There have been lots of stocks that have just been breaking out that we're trading before on very light volume, so we're trying to keep track of all the action. We've been following all the plays in the chat, posting tons of alerts with charts and technical analysis, trying to stay on top of all the top plays. So please come check that out. I'll provide a link at the end of the video. If you checked that chat out before and you just saw the free chat, I have to give you access to the premium channels. So if you please come back, check it out. When I see your name is in the welcome, I will give you access to the premium channel automatically for everybody that comes now going forward, checking it out the chat, and then you can check it out for a few days, see how you like it, and yeah, and catch up on all the good information that we provide all through the trading day. Okay, so first up, let's take a look at ticker symbol VVPR. Closed up 225% today. This was a huge move. Notice how it had super light volume prior to today. There was a mini volume spike yesterday, and that was the clue. So keep an eye out for that. What we're doing now is we're tracking all the small caps, and we're looking for thinly traded stocks that have a volume spike. What this is called when you have a spike like yesterday, a bit larger than all the previous volume bars, is the front load. Okay, so this white candle here, they front loaded, and then today, boom, they took it off. So you can catch some of these plays at the start before the big run if you can identify the front load, and we do that through the volume bars. So this did break above all the moving averages. It closed above the 300-day simple moving average at 326. It needs to stay above that level. So if the candles do work back into the bands, you want to see that level hold. Okay, so if we look here at the VVPR daily chart, that longer term, you could see back here in what is this, the end of December 2017. This is or 2016. This is the all-time high right up here above 725. It got close to that level. So this is the entire history of the trading of the stock. You could see right here this 450 zone, okay, was prior resistance. Look how the stock, the entire history of the stock, has had zero volume, and then out of nowhere today it has 13 million shares and it busts through everything. So keep an eye. There's a lot of plays like this. What it has to do now is break through the 450 zone. You're going to have resistance here at between 550, 575, and then the all-time highs up there around 730. What you do when a stock's running like this that's thinly traded, the safest way to trade it is through the intraday charts, and you use the intraday charts to time your entry and exit points. And you can see here it was no trading before. You can see the volume started percolating yesterday, and it did close. It did push above the moving averages there. With the little pullback into the close, and then today all that volume that poured in, that was your clue. So that's what you're going to be looking for now going forward on these small caps, since they're going down the line and they're running them. What you want to look for at the open is the big volume. If it's pushing on big volume and it breaks out above all the moving averages in the 15 chart, it's in play. Keep riding as long as that EMA4 support holds. Now you can see it came back and it broke that middle Bollinger Band. It's going to need to get back above. It closed slightly above there. If it can stay above 430, it'll be back in play. It'll continue to be in play, and then if it can get above 550, that's going to be your clue. It wants to break out higher. 675 will be a big level to break. Now if it drops below this 350 support zone, you could see it drop down to 288. Okay, let's take a look at CLWT. Closed up 155% today. This is another one of those parabolic runners. Now in this one, you could see the front load happened last month. You could see it had some volume, and then they pulled it back and they went sideways on it. And that happens a lot of times with these penny stocks. You could get the front load a few weeks out, and and this could have been dilution as well. They're obviously dumping shares, and so basically it broke out above all the moving averages here. And so what you want to see, if the candles do work back into the bands, is this 200 and 300 day simple moving average hold. You want to see it stay above that blue line at 329. You have EMA4 up here at 364. So if they do work back in, what you want to see is a bounce off of EMA4, and if that level holds, that signals the chart is still strong. Check out that big volume, huge volume behind the move today. So if we look at the CLWT monthly chart, I had to use this monthly chart and go way back to find resistance. You can see it's hitting this resistance zone from back here in 2010 and 2011. That's the 200-month moving average, the red line. So that's going to be the next key level to break, is that 835 level. You can see it's big resistance. Now what it needs to do is get above this 2014 high close. All right, it busted above that level right now. That's currently the top of this sideways channel. It's basically been channeling back and forth throughout the last several years, and then now this is a monster breakout out above resistance, but this is all about the monthly close, and the month just started, so you know, this candle is going to change greatly. You know, if it could stay above this 2014 level, you know, it could push back up to that 6 and 8 level. If it got above 835, that would be a big signal that wanted to keep pushing higher. Keep in mind that it is hitting this key resistance zone. On a pullback, what you want to see is that the 100-week moving average down here at 424 turn into support. Okay, let's look at CREG. So I was going to put more China plays in this because they are running right now, the China penny stocks. I mean, that could have to do with the you know, all the Trump talks that are going on right now in China. But you know, the small caps are running, and then we're noticing that the China stocks are getting a bid right now. And I just have CREG in here, but there's several of them. I'll try to get another video out tonight. That's why I'm trying to go through this fast so I can get more videos out. As you can see here, it did bust above the moving averages. Okay, and so you know, this was alerted earlier in the day in our chat, and it finished super strong. So you know, congrats everybody. You know, a lot of these that we're catching, they're starting off and they're breaking the middle Bollinger Band way down here at 161, and once they get above that middle Bollinger Band after trading below, it hits our radar screen. And when you get a work above all these moving averages like this, what you want to see is that top moving average turn into support. So it's all about staying above that 100-day simple moving average at 220. You need to break this closing price here in February. If it did close above that level, if that level holds, then this 270 to 280 resistance zone will be the next target. Okay, if you look here at the 15-minute charts for CREG, you know, we put out alerts in the chat when it was down here and it was breaking out above resistance midday. It caught our scanner, and you could see anybody that jumped in right here did really well. You know, they had plenty of time with the alerts that were given out and with the technical analysis if they wanted to, you know, because right now people are playing the momentum on these penny stocks, and so you got to roll the dice and jump in when the volume comes in if you want to play these types of plays. Keep in mind they are very risky, and when you trade a stock that has no volume, when the volume dries up, it's going to be really tough to sell, and pump and dumps are always followed by steep declines. So the game is hot potato. The key is to get the low entry point, and then you're in the driver's seat. It doesn't matter now if it turns into a pump and dump if you got in down here at 150 to 170 because you're well in the driver's seat. Now if you chase and you bought up here at 238, now you need it to keep pushing. You know, so what we try to do is get people to locate the next runner. Try to get in the next one that's getting ready to go. Don't be a chaser. Be a good entry point person. Entry point is everything. Remember EPIE, EPIE. Okay, take a look at AMRH. This is another one that was alerted earlier in our chat at much lower levels. It did close up 42%. And so, yeah, this did end up following through nicely. It made our scanner when it got above that 140 level, that middle Bollinger Band, and we were looking for a close above. And it did close above today, so that was great. It hit the next target, which is the 50-day simple moving average at 171. You can see it closed above that level in February, and it failed to hold and pull back. So what we're looking for now is a break above 171 and then a run up to this 100-day simple moving average at 226. This did have a good volume spike, and it had this big volume back here in January. So this isn't as thinly traded as some of the other ones, even though it has had super light volume. It has had some days where it has good volume, and that's what you really want to see for the stock to be more liquid, especially with these small caps that are running. So going forward, AMRH has to stay above 140 and then break 171 to head higher. Okay, now let's look at LENS. Okay, so this is another one alerted in the chat, and you know, it only had 231,000 shares traded today, but it did close up 48%. You know, you can see it had this big volume spike back here in December, and then now you're getting the largest volume day since back then, since December, so that's your clue that the chart is heating up. And so it did bust above all the moving averages like the other plays we talked about. It needs to stay above that 200-day simple moving average at 313, and then it needs to break the closing price here on March the 19th. You can see it hit that level and it stalled out. If it get above that level, then there's this tight channel over here. If it get above 360 zone, it could possibly run back up to that 460 level. That 460 zone is going to be the big level to break. Okay, let's look at IMTE. Okay, so this was yesterday's, big pump, and it did follow through today. You can see it had that giant volume spike, and this really, got a fire under a lot of people, and it looks like a lot of the trading firms that trade the penny stocks are jumping in the game, and they're going down the line and they're running them. IMTE was a really good play. It ran all the way up from $2. You know, it closed at $2, and then it ran all the way up to 41. Today it had a big gap gap up open, it ran up to 41 and it pulled back again, that 42 level. And actually, what did it hit? It hit almost to 44, and then it pulled back. See, what I was talking about today was this candle that's floating up in space up here. You have EMA4 way down here at $18. You know, that is the first moving average support level, which would be a huge haircut from 31. Now you have over here, you have the 21 is the target that I've been talking about. If the candles do pull back, that will be the first support level to hold. And then if that level breaks, then you have EMA4 at 1840.42 on deck, a drop below 1842, and that's where I get the $10 level. I've been calling 10 because that is the closing price on 1122. So that is the potential downside risk. So if you're a chaser and you bought up here in the 30s and 40s, you know there's a potential for it to drop all the way down to $10 before it finds a key support level. Okay, so because that was the last high close. All right, so keep that in mind. If you look here at the IMTE 15-minute chart, I mean, what do you guys think? Is this going to run up to $100 or what? If you're jumping in at $30 or $40, how much upside is there? It already had over 1,000% gain. And then, you know, all the easy money was made down here. You know, if you're jumping in at $40, and for whoever bought up here, it's like what? Even if it goes to $80, you only made 100% gain, and you took a major risk. The risk reward at these levels, there's so much more risk than potential reward. Even if it ran to $80, that's only 100% gain. I mean, for the risk that you're taking, that it's not like it's not like this is going to run to $300 and you're going to get another 1,000% gain. When these things are done, and how do you know they're done? Look at the volume down here. I put out the alerts. Check out how it had huge volume on the run up, and then they dumped right here. This is the climax spike, all right, this green candle, and then they came over, and then they had another big dump here, and then check out what happened. No volume. It just dried up. These little candles right here, these are called 4-price dojis. That's where the share price stayed at the same level for an entire 15 minutes. That's just a signal that the stock is totally illiquid, and now it's going to be really tough to sell. Okay, so especially since they hired a promotional firm, which companies do that so that they can dilute and sell shares. They rocked it. They went from $2 to $44. So that promotional firm, you know, they did their job. But now you don't want to get caught holding the bag. All right, so it has the declining resistance. If it breaks above 31.50 tomorrow, you could see it run back up to 41. Now, if this 31 level breaks, you have this $21 to $22 level was the support from back here from yesterday, and if that broke, that's where you could see that big drop down to $10 that we're talking about. Okay, let's look at SEII. This is the stock that's been running with IMTE, and the big thing with this one is the long upper wicks on the candles. If we look down here at accumulation distribution, you could see yesterday there was a spike down, and then today it really fell off the cliff. Check out shaken money flow. I mean, it dropped. There's even a bigger red histogram bar than yesterday. When a stock is up, especially on big volume, like 4 million shares, and then it closes up 22%, you're supposed to have a large green histogram bar. You're supposed to have a big spike up in accumulation distribution. When you have a spike down on both of those indicators, it's called bearish divergence, and it's a sign that the company is dumping shares. How else do you know they're dumping shares? Look at the long upper wicks. They're pulling it back. You know, they run it up, they dump all the way back, and people are buying into it, and it's still pushing higher, so you're going to get all sorts of suckers, and it's going to keep happening, you know, until somebody gets stuck holding the bag, and then it pulls back, and then people get burned. And so, you know, the safest way to play these pump and dumps is to end the day in cash, and then you can start again fresh. That's the safest way, because that way you don't risk the gap down open potentially the next day. But you could miss the gap up open, and people that are rolling the dice, that's what they're looking for, is that gap up open and to continue running. For this one to break out higher, it has to get above the 100-day simple moving average at 488. That's the big level to break, and then that's up here, this above $5 level as well, which is the high close. So if it can get above this high close level, then that would be someone wants to head higher. If it stalls out here, you could see it pull back. You want to see that 50-day simple moving average down here hold around 380, and then yeah, the middle Bollinger Band way down here at 337. Okay, so take a look at ticker symbol MARA. This is a crypto stock, closed up 12% today, and so this is more of the kind of bounce play that I like personally, or are stocks that are already in an uptrend and pull back. You can see it closed above the middle Bollinger Band back here in April. That signaled the start of a new uptrend. It got above the 50-day simple moving average here on the 24th, and then the candles pulled back, and then they came down and they bounced off of this middle Bollinger Band support zone, and then now it's back up above that EMA's 4, 8, and 13 above the 50-day simple moving average. You know, if you sold up here and then you load down here while it's still in an uptrend, that's a nice trade, because the stock has a better chance of heading higher if it's already in an uptrend, as opposed to if you're playing the bounces over here as it's dropping. You know, because then you know, it could continue lower. The bounces are short cover rallies, but if you get a bounce in an uptrend, you know, there's more likely that the uptrend is going to continue. We watched that middle Bollinger Band. Okay, so today bullish engulfing reversal pattern formed, and so this is a very strong reversal pattern. We'll be looking for bullish reversal confirmation. You know, as Bitcoin's taken a little bit of a breather today, but as long as Bitcoin's in a strong uptrend, we're expecting these cryptocurrency stocks to, you know, blockchain related stocks to continue heading higher. And so what it needs to break is this high close here. If it can get above this 190 resistance zone, then you're looking for a run back up here to the 200 and 300-day simple moving averages. Okay, let's look at MEET, closed up 16% today. Yeah, this one has a nice uptrend as well. You know, these kind of charts are better for trading. You know, if you're, you know, it's easier if the stock's liquid. You're more likely to have a continuation of uptrend if you're a swing trader. And so, yeah, this isn't producing those monster gains, but it has a nice pattern going. It did close above the 100-day simple moving average at 252. That's the key level to hold. If it holds, look for a run possibly up there to that 200-day simple moving average at 306. Keep in mind it did push above that upper Bollinger Band today, so it might pull back, test that 100-day simple moving average. The last time it got above the 100-day simple moving average, it failed to hold and it pulled back, so you have to be on the lookout for that. It did close above that level on a big volume spike, and so yeah, and it was the first day, you know, it was a red candle, and then this is the bounce off the middle Bollinger Band that I'm talking about. It was at the upper Bollinger Band, worked its way all the way back, and then the key is to load off this dotted purple line, and that was a good entry point for that breakout higher. Okay, keep an eye on EGY. This is in the exploration energy sector here, and this has been a hot sector for the small caps. Closed up 10% today. Look at this beautiful chart breaking out higher. You know, this is more of a you know, this is a nice swing trade chart. You know, it's taken a while to get cooking here, but today it had the big breakout higher, and then you could see it broke out above high close resistance. That close above yesterday, look how it had closed just above this closing price here on the 5th of March. That was your clue that it was ready to head higher. Anytime you get a close above horizontal high close resistance, that's your clue that the stock's ready to break out higher. Once again, that theory was proven correct with today's move. Look how all the candles hit that line and failed to break with the close above, and then finally they did yesterday. That was your signal. Now, if the candles pull back, since there was a giant volume spike today, what you want to see is EMA4 at 103 hold. Okay, if you look at the EGY weekly chart, you could see here it's hitting this high close from back here in May, and so it needs to break this 112, 113 level. If it can get above that, it might possibly run back up here to 125. That was the high close from back here in January. That looks like where it's headed, is back up to this 126 zone. Okay, so yeah, if it can get through 112, you know, look for 120 and then 126. Okay, let's look at TNTR. This closed up 18% today, so this caught our eye in the chat today because it had this big pullback, and then it closed above EMA's 4 and 8. It did close above EMA 8, so that's good. That's what we were looking for. It closed above 125. We want to see that level hold. The last time it closed above that level was back here in April. Notice how it failed to hold and the downtrend continue. If it holds, what we're looking for is a break above this orange line. You can see that broke intraday back here, but it failed to close above and pulled back. And so if you can close above that level, you look for a run up to that middle Bollinger Band at 156. All right, last time that it had a move like this was back here in March, and it did break out above that 50-day simple moving average. So the upside potential is if it gets above this middle Bollinger Band, is that it tries to make a run up to that 50-day simple moving average. So keep an eye on this play. It will be a risk to hold if it closes below EMA 4 at what is that, level 118. So it has to stay above EMA 4 to remain in play. That's the stop loss level. Okay, let's look at BOXL. This one was alerted yesterday. It did close up 12% today, but it formed the dreaded black candle. And so this is a candle that you know, like let's say we loaded yesterday and we were riding overnight and it had the gap up open. Okay, so the open was way up here at 1150 and it ran all the way up to 17.5 when it was pulling back from that longer upper wick. That was a good signal to lock in gains. If you didn't lock in gains up here above 1150, this 1150 to 1750 level, once that black candle started forming, that was your clue to lock them in. When we see a black candle forming during an uptrend like that, we head to the sidelines, locking gains, or we avoid to jump in if we're not in, because the downside risk is the candles now work their way back into the bands and drop all the way down here to EMA4 at 646. You know that this close up here around 750 will provide some support, but if that breaks, it's definitely dropping down to 646. If you look here at the BOXL 15-minute chart, you could see it consolidated here. You know, it had the big climax spike. We call this the climax spike. You look at the huge volume bar. You know, there was no volume before. Look at the volume on the first. There was nothing. When you get this kind of volume bar followed by a red candle, lock them in. Don't be expecting these things to be like miracle workers where they're just going to keep delivering. These ATMs are open for a very short period of time. They're like pop-up shops. You know what I'm saying? Like when these kind of charts, you know, all these kind of pump and dump charts that I was showing you earlier, you know, these are like, you know, these are like pop-ups where they only last for a short period of time and then the business is closed. As soon as the volume dries up, get out of Dodge and move on to the next one. There's plenty of plays out there. Don't get married to any of these penny stocks. They're just dates. And so bottom line is if it fails to hold support here and you see a drop below 750 support zone, that's going to signal downside risk. If it gets above 875, they could run it again. That's the thing. They can keep pushing these things. You never know. But you don't want to be holding if the volume dries up and the chart breaks down. Okay, let's look at AMDA. Closed up 15% today. This got some volume out of nowhere. It did fail to close above the middle Bollinger Band. We were looking for a close above that level. You know, it's always better if it can close above. If it broke intraday, it's a red flag that it ran all the way up here to that 50-day simple moving average at 165 and pulled back. You know, we wanted to see a close above that level. You know, it also failed to close above the middle Bollinger Band at 134. So that was a bearish close after a big intraday move. Notice how the middle Bollinger Band's been major resistance. The algos aren't letting it close above that level. If they let it close above that middle Bollinger Band, that's going to be a bullish change in trend, and you could see a possible uptrend starting if support held. Notice that there was a gap here between low of day on this candle and high of day on this candle, and so that gap did fill. A gap fill is a climax event, and notice how it failed to get above the top of the gap. That's always a big level to break. So yeah, we'll keep an eye on AMDA, but that was a disappointing close. And then this is one to put on the radar. JMU just kind of caught my eye here. You know, it has only 105,000 shares, but as you can see, it had, you know, some volume down here at the bottom. You know, it has that kind of look that some of these runners that have been running lately have, you know, where they drove it down on super light volume, and then now you have some what looks like could be some front loading down here. You know, granted, it's not a whole lot of money, but what makes it interesting is back here in January, there was some volume. You know, you had some volume back here in November, so the volume can come into the stock. You know, so what you want to see now is a bullish volume spike and a push through that middle Bollinger Band at 74. If it gets above that 50-day simple moving average at 83, that's when you know it's really cooking. And then the 100-day simple moving average at 92 has been big resistance. You can see the last time that it made a run from below the middle Bollinger Band, it ran all the way up to the 100-day simple moving average at 92 and stalled out. And so if it pulled above that level, you know, if it hit that level and then failed to break, that would be the temporary top locking gain zone. And then if it closed above, that would signal continuation. You know, this could fail to follow through. It's just the volume. We follow the volume, and the volume's telling you to keep an eye on the stock. Okay, thanks for viewing this video. Come check out the chat. I'll post the link below the YouTube video. Thank you.